The Morgan Report with David Morgan.
David Morgan with you with money and metals for the week ending 18th of November 2016. Well, I have not done one of these in quite some time, but I was out in Germany at the Edelmetall and Commodities Conference, Precious Metals and Commodities Show, and then did a quick turnaround, went to the Silver and Gold Summit in San Francisco, California. And I will say that after gold got whacked for about $100 to the downside and the silver off about $2, the sentiment in Germany was very, very good. Not exuberant, but good. The conviction in Germany, generally speaking, at these type of investment conferences are very steadfast. I think it's primarily due to their history with the Weimar Republic. Its parents, grandparents, or great-grandparents, but regardless, it's in their family knowledge base that currencies of all stripes do have problems over time. So that's one thing to note. On the San Francisco show, similar. There's strong mood, but not exuberant by a long shot. There weren't too many long faces. I think most people were grateful for the amount of increase that we've seen in the precious metals and especially the underlying stocks from the beginning of this year, 2016, January, till the last couple of months, where we've certainly fallen back. And of course, gold and silver both showing weakness at this time and probably will follow through to the end of the year. I did look at the Commitment of Traders report recently for our website members, and I will continue to do some of the shows. I will be in Vancouver, British Columbia, January 2016. The gold market, again, weakness. We're at about a 5-month low. Reuters put out a report this week, and they talked about the GFMS report stating that they see it bottoming out about this level, actually $12.40 an ounce, and their forecast for next year is $14.20. So something to be optimistic about, basis the GFMS report. On the dollar side, up to a 13-year high. And then, of course, the most important markets of all, when we talked about the Silver Manifesto, the debt bomb, what's going on with the debt markets? Well, what's going on, as we all know, really, is that many are selling the U.S. Treasuries, either short-term, intermediate-term, or long-term, and the long bond has basically fallen off a cliff, which means that raising interest rates by the Fed is actually an act following what the market has already forecast. They're not leading it. That's a fact. So I do expect to see a rate increase in December. It probably will have a lot of hoopla around it. A quarter point is really not anything significant, but it is, again, almost required at this point, regardless of what kind of rhetoric they put out from Janet Yellen et al., because the markets have already spoken. The bond market has fallen off sharply. The 140 level is one that's very key from my analysis, one that you might bear in mind. And certainly there has been a shift psychologically between what the U.S. dollar is worth in the longer term and what it is worth in the short term. To repeat myself, no one wants a dollar for 30 years or 10 years, but they certainly want it for today's purchases. And of course, this will cause stress in the emerging markets because it's very difficult for them to pay back at a very high price U.S. dollar. So more turmoil ahead, and not the end of the world, nothing to really get a lot of loss of sleep over. Nonetheless, something to pay attention to, because these markets will become more and more volatile as time goes on. I will be with you from time to time. I won't promise a weekly, but perhaps at least a quarterly, and more likely bi-monthly. I'll try to get one of these out at least twice a month.